Well, hello, retail traders. Welcome to the Sneaky Snake Trading Strategy, where we trade chart patterns, moving averages, and being in the now, and candlestick patterns. So we're going to talk about Tesla. Tesla's been in the news last week, and I thought it was excellent news. But the market's been in kind of a downturn, and I'm going to give you 3 reasons why I think Tesla pulled back last week, and 1 reason why it shouldn't have. So pull up this website first. One thing I noticed on the website looked to me like they updated the website here on the front in a way, and I appreciate that. I've been wanting to put some kind of something in there. But so that's Tesla's website, and we're going to go straight to the news. Elon had hired a new CEO for Twitter, female, which I think was a smart move. She's got a lot of good experience and she's very smart. So I really appreciate that. He's hopping and dancing around on that news. That's going to give him some relief to go back to Tesla and to manage Tesla a little bit more and to innovate other projects that he's working on. So right now, this is great news. I love the fact that he bought Twitter. I mean, it was some of the best news besides Hillary Clinton losing the election that I think I've, had in my lifetime. And then this Bud Light deal, that's my top 3 news things going on right now. But I think it's a great idea, and that will allow him more time to deal with Tesla. Now, Tesla had a recall last week. That's another reason I think the stock had dipped a little bit more. And then also we have the market not in such a good mood right now due to the debt ceiling, which is causing a lot of volatility and a lot of good runners that we've had here lately. And I think that's just going to be a slow, and when they sign this bill, maybe in a couple days advance, you're going to start, we hit a triggered support, we might start breaking out a little bit before that bill gets signed. The closer we get to that due date, that's when I'd really start putting the grips on your favorite tickers. At least get into 5 good trades. Once that bill gets signed, we should have a bounce in the market. Now, let's go straight to the chart. There's a couple things that I recognize, and I did recognize it during last year when we had the pullback, was the long snake that we were trading, and I was trading it almost every day. The channels of each day, I'd buy the dip, sell it at resistance every day, just if it was a short scalp or maybe a long $1,000-$2,000 gain on a strike or on a option. So yeah, I could always easily make $60-$80 on an option with Tesla, and then even get to $200 to $400 on an option. So now we've got the tight spread going on. So that was the snake that we had, and then we've had the reversal, and we created what you would call bull flag. In that process of creating that bull flag, this is what I'm talking about right here. This is a bull flag right here. You hit the bottom, and then all of a sudden you start building a flag, and then she's going to pop up and break out. The bear flag's just the opposite. You work from the top, and you can see that during the dip that we had here. We'd have these little flags that would come up after we hit the triple top, and that would happen 2 or 3 times during the downtrend. And same thing right here. So you got the flag and you got it going up and down, but this is a bull flag. This here is a bear flag. So keep that in mind. And also during the process of making this bear flag, we created a inverse head and shoulders. It's just the opposite of a 3-headed head and shoulders. You just trade it in a bullish pattern. This is a bear flag, this is a bull flag. So this is the head right here. It's got a big old head on it. This is daily time frame, and this is your shoulder line. So we're going to draw that in. I want to draw this in here. First, let's draw this here bull flag in. Make that real simple. You just want to take this candle right here. This is how I do it. I go from that body of that candle right there to that one. And then I automatically go to the lowest candle that I can find on the bottom. And see how we dipped and it respected that dip last time? and we had a triple top right here. So I do believe that if we do break the 50, now these are the moving averages. These are moving averages. This is, green one is the 50 SMA, and the yellow one is the 65 EMA. And then that purple one, that's the 50 EMA. That white one, that's the 21 SMA. And then that 9 is the EMA. Now every one of these have a meaningful value in my strategy. For right now, we got to pull this up and we can see that we just broke the 51 and we run up and hit the 65 EMAs. The next one is a 50 SMA, which makes it a much stronger resistance to break. If we're able to break that 179, we're off to the races, up to the resistance up right around 190 in that time frame, in that channel. You want to stay in that channel because that will be a resistance, these two tops, and so that'll be a hard resistance, and then take it long to a triple top up here, or maybe even to the 200 SMA, and get out of and see if it wants to break that. So that's a bull flag. Now this is inverse head and shoulder, and I'll tell you what's attractive about it. I'll take all these alerts off so they won't fog our eyes. So here's your head, and this is your shoulder line, and then you got your neck right up here. This is your neckline. So we want to draw a resistance across that neck. We want to keep in mind of that neck. Which is right there. And that shoulder line is right there. There's two of them. There's the shoulder line. So now, right now we're poised at this here shoulder line of the inverse head and shoulders. Now the way you play a bull flag, so you've got your head, you've got your shoulder, and you've got your total neckline right here. And that's going to be your resistance to break, is the neck. Now I'm going to show you two different factors that's going to key you in as a resistance level up in here. First, you got the triple bottom, so this thing could easily drop down, and there's a lot of people that have, there's a gap. See that gap? So I'd like to see it hold that gap, and then you have another inverted head and shoulders right here also. I know it's kind of confusing, but when I'm trading, I like to see if I could hold the gap as support. So I'm going to draw another trend line on the bottom of the body of that candle right there. This one right here. And that's going to be a support level for me. And then the bottom line support is going to be this triple top here that had a break. 1, 2, and 3. So that's the gap. I'm going to color that in because I want to remember that as the gap. Every chart tells a story. So we've got inverse head and shoulders, and we got a bull flag, and we've got a market that's in a decline until a bill gets signed, which I think would give us enough pressure to even bring it down to buy it at support. Let me take this off and make it a little bit smaller so I can see it. But I do want to fill that right there, which I think would bring it down to this bottom trend line. So I'm gonna set an alert right on the bottom of these candles right here in the middle of that gap. That'll show a little sign of weakness. And I'll create one alert right there. And that's at 153.46. And that's about the pivot point inside of that gap. And that'd be a double bottom. And I think we could take that up for the triple bottom of these here three. on that bottom of that flag. And then you always want to try to wait for that third dip. So that's where I got my alert set. Now if it comes out here and breaks out of the 50, I'll scalp it all the way up here to 190, 196. Now I'm going to show you why I think that's a resistance. You want to take and draw this trend line. From right there to right there to the top of that candle right there, from the top of that one, and extend that out to the right. And that almost meets up with the 200 and this other trend line that's right here from this previous high, 196.89. So that would be my solid exit idea of hard resistance somewhere in here. I would write that down as an exit. So if it knifes on down, hits the bottom of this trend line for the third time, that's the best time to buy this stock. That'll be the best time to buy it, right around 148 or a little bit above it. If it decides to go ahead and break out of the 50, I think you can easily get out of it at 196.89, somewhere in this area between 180, 190 and 200 bucks. That's how we're going to call it. I hope I made that perfectly clear. I wanted to show you the different patterns. We have the triple top, which is a bear flag, time to short stock on daily. Depends on where it is. Then you have the long snake, the channel that you can play in the snake, which is very profitable. Just because the stock's going down doesn't mean you can't take trades off of it. I guarantee that. I was trading this all the way down. That's how I developed this strategy. Then you had the breakout, pull back, boom. That's how it works. So you got snake, which you can play in that channel. You know to exit off a triple top when it's at a hard resistance. You can trade that channel. And then you got to trade this channel. And then you wait for the breakout. Maybe to get out at resistance, wait for a small pullback, and then break out. But I think this news is great. Tesla is always number one in my book. In summary, he gets a bad cowlick from the fat cats, and you know, it's just the way the cookie crumbles. It's a great opportunity to play volatility on this stock. I've chased it from the IPO all the way up to $2,200. When it was getting bad-mouthed and beaten up by institutions and stuff like that. They haven't stopped. It's still a great trade. And that's Tesla. Just got to be smart about it. Find the good opportunities. Keep an eye on it every day. Learn the patterns. And you can become a successful trader with it. So we've got two flags. We've got the inverse head and shoulders. We've got a lot of flags. We've got the triple top. We've got the inverse head and shoulders. And we've got the bull flag. Every video is a learning session. I hope you all have a great day. And when this bill gets signed, smooth sailing for a while. We are heading into a recession, and you got to be very cautious. I try not to let a lot of that bother me, because if I do, I wouldn't be able to think straight, and I wouldn't be able to get nothing done. So I know it's out there. I know what's going on. I just got to kind of write it off and keep it in the back burner and keep an eye on the technical and buy the dip and sell at resistance. And there are a few swings that happen, and that's like when we would when the bill gets signed, I'd probably start swinging a few stocks. I swung some from the bottom, Boeing, Apple, IBM, and just, you'd only need a couple of them to swing. And Google right now is the one that I'm really interested in, and I swung it. And Amazon, nope, that ain't Amazon, that's Key. How'd that happen? Amazon called this one out, and I was in it for a little bit and sold it at the double top. So it's retesting again. We completed a gap here, which I thought was very pleasing, which could give this stock elevation to 117. And there's some that's dipped. Airbnb had a downgrade. There's a lot of ones that got real hit hard during earnings. Crocs. You know, they've been pumping Crocs real hard. We're playing a Darvis box on Airbnb, and she pulled back to the pivot point inside of it. So I'm watching it real close. See if it holds that pivot point and runs back up. If not, then I gotta short it down a little bit farther. And there's just a lot of good opportunities if you just take your time and be very patient. Banks are really hurting right now. I'm watching them, the big banks, because I know they'll probably bounce soon. Bank of America's down here at the bottom. I've been trading them. So, yeah. Have a great day. Tesla, keep it on watch.